JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 10th of May 2022. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a view of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our new research page, which you can find under the Start Learning tab here, and then click on the Market News and Analysis. So yeah, and I believe you can find some useful information here. Now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. So yep, the index is drifting, well, had drifted lower, and if you remember, I talked about this and I said that we need to wait for a drop below this highlighted territory, below this 26,300 territory before, let's say, getting comfortable with further declines. And yeah, we got that drop, and what I said to you previously was that my next target is the 26,051 territory, or even this 25,775 level marked by the low of the 24th of February and the high, or actually I would say near the high of the 16th of March. So it actually was more of a closing price here. So in other words, a good potential target which was reached. So now the big question here is, can we see a further decline? Now, well, I mean, this arrow now has to go here a little bit. So yeah, we did rebound nicely here. Maybe this could be seen as a nice reversal signal, like a pin bar maybe. So I would say this way, that if the index manages to climb back above this highlighted territory, this 26,300 zone, then yeah, we will consider maybe a bit of a retracement here, a bit of a correction to the upside. However, if it continues to trade below that 26,300 zone, then maybe we're not done with the downside yet. Maybe another move lower towards that 25,775 territory could be possible. So actually, I'll keep this arrow like this right now, because again, there is still potential here, because again, like I said, even if we do retrace somewhat here, but we struggle to move above the 26,300 zone, then yep, another decline here could be possible. Now jumping into Shanghai Composite very quickly. So yeah, the index did rebound from this area, or should I say close to this area, this 2,955 area. I spoke about that recently, so I said that in order to go for lower levels, we need to see a nice good clear drop below that zone, and well, for now we didn't get that, of course, and instead we got a nice reversal here, and we're still kind of seeing this index trading in positive territory. So yeah, I would say if we continue to trade above this, then we could see a further push higher. But let's not forget about this downside line. So in other words, if this area is still not something that you're comfortable with, you know what? I mean, you can just keep it for now. You know, it will present itself with a nice opportunity opportunity. And for me, for example, here I would like to wait for a clear breakout here, either through this 2,955 territory or through this downside line, and then yeah, we could take it from there. Now, jumping into the German index, beautiful move to the downside, as you can see here. I talked about this previously, and I said that if we drop, if we kind of stay below that 13,850 territory, then yeah, further declines are possible. Initially aiming for that 13,578 territory, a break of which could open the door towards lower levels. My next target, as I said before, is this area between the 13,150 and the 13,200 levels, so approximately around here, and that's what I'm going to be aiming for. The cash index is currently sitting at around 13,000, almost 500 level, so basically we're still below this area. I can actually, I think, put this highlighted area right here, because I think this is going to be a little bit more valid. So I would say this way, as long as we remain below this highlighted territory, then yeah, the downside scenario is still on the table. For the upside, I would need to see this index climbing back and kind of staying above 13,577 territory, and then yeah, we could go from there. The S&P 500, so beautiful decline, cleared this key support zone. I talked about this 4,056 territory, 57 actually. I said that if we drop below this and stay below this, then yeah, further declines are possible. Well, as you can see here, the index kind of drifted nicely to the downside here, and yep, it kind of went all the way here, even dropped below that psychological 4,000 mark. The cash index currently is climbing back above this psychological 4,000 mark, and yep, we're currently sitting at around 4,023 level. So what can we do again right now here? Of course, I would say even if it rebounds here, yes, there could be a move higher, but keep your eyes on this highlighted area right now. I mean, this could provide good resistance. If it does that, then another decline could be possible. Now, in a way, I would say for now, if you want to be a little bit more on the careful side, what you can do here is just wait for a drop below this 3,975 level, just to be a little bit more on the safe side, because this drop would confirm a forthcoming lower low, and potentially this could open the door towards the low, the 25th of March here of last year, near the 3,853. Certainly, if the index somehow climbs back above this 4,056 or even 61 level right here, that's where yeah, we could maybe consider a bit of a retracement here, or maybe a correction to the upside. So yeah, keep that in mind. But again, for now, we are below this highlighted area. If we continue to trade below it, then yeah, another decline could be possible. Dxy Dollar Index. So this is quite interesting because, as you can see here, this barrier, the 103.82, yeah, approximately around there, 103.82 did its job and provided resistance. Now, although we had these overshoots here, but still these ended up being all as false breakouts. Now, let me show you what that level is, or was in the past. Basically, this level here is the highest point of 2017. As you can see here, it continues to provide a hold up, and well, for now, I would say we'll take a bit of a careful approach here, because what I said to you previously, that if we drop somewhere below this 103.61 territory, then, and we stay below it, then maybe we could see a bit of a retracement here. Now, of course, some of you are probably you know, hoping to see that, and but okay, this is, we'll say for now the index is, yep, trying to move below this area, and so far I think it's succeeding in doing that. But if you're a little bit on the careful side, what you can do here is keep your eyes on yesterday's low. which is roughly around that 103.39 level right here. So if you're not really comfortable, let's say, with this hurdle, then you can keep an eye on this one. And if we drop below this, now this is where it could become a little bit more interesting for a few more sellers, guys, and we could go maybe for a bit of a corrective move here to the downside. The reason why I'm saying corrective, because, well, let's not forget that we're still trading above this upside support line taken from the low, the 31st of March. Now jumping into gold, guys, this one is, or should I say, managed to stay above this 1850 territory. So yep, as you can see here, marked by the, which is the current lowest point of May, by the way. So we managed to drift below the 200-day EMA yesterday, but we failed to drop below this hurdle. We're now seeing a retracement here, a push back above the 200-day EMA. Well, let's see if we can actually climb a little bit higher here. However, again, we'll keep an eye on the dollar index as well. If suddenly that one starts popping higher, then, well, maybe, you know, we could see the downside on gold here as well. However, again, let's say if Dxy does make a bit of a retracement, maybe gold could see a bit of a boost here. Either way, as you can see, I've drawn a new downside line here just to kind of, you know, complicate our lives here a little bit. But in either way, guys, if you're looking for some upside, now probably the safer option is to maybe wait for at least a break of this downside line, although I get it, it's a bit tentative here, but yet nevertheless, if you are comfortable with, let's say, trading this area, I would say have a tight stop loss just in case, because it could go either way very quickly. So, you know, yeah, or at least, you know, risk what you're willing to lose, or you're happy or you're okay with losing. So that's why this area right here is a bit of a tricky one. In general, we are kind of, you know, getting into a bit of a squeeze here, as I can see. So let's say if it dropped below this 1850 zone, there is still hope for the bulls to step in somewhere around here near this upside line taken from the low, the 9th of August, or the lowest point of August of 2021. And if we do rebound, then yep, we could see a nice reversal here, a nice push back up. However, still probably just to be a little bit more on the safe side, a break of this downside line would be needed. So in other words, guys, for now I'm just waiting here. WTI oil very quickly on that one. So yep, for now here we can see that we saw a beautiful decline yesterday. Look at this, I mean, strong move back below this highlighted territory, moved towards this upside line taken from the low, the 2nd of December, and now the question here is, can we see a rebound from this area? Well, I would say for now, that's the game plan, because again, this move lower, although it's a strong one, could still be classed as a temporary correction before another possible leg of buying, because as you can see here, we're still trading above this upside line taken from the low of the 2nd of December. And yep, in a way, even if it drifts a little bit more to the downside, yes, as I said, the bulls could still come in somewhere around there. Previously I talked about this 93.56 territory for the downside, but to be honest, the further we move to the right, I would say I'll just keep an eye on this upside line for now. If we drop and stay below it initially, then I'll aim for that 93.56, but if that gets broken, well, this could become a little bit more exciting for a few more sellers. And previously I talked about this idea of this one being somewhat of a range. Now again, it's not an ideal one because we had a violation here, we pushed higher and then we drifted back down. If we take a look at the weekly chart, maybe again it's you know, it could play out. However, it's still not an ideal one, so you know, we're kind of excluding this idea for now. Another thing that some of you probably could be, you know, drawing here or trying to see, or maybe, you know, we're always trying to see something here, maybe a rising veg of some sort. So again, if that will be the case, then certainly yes, according to all the T rules, these tend to break to the downside. However, as long as it remains inside the pattern, it could still, you know, move higher slowly, grind higher. So that's why still, either way, if you're looking for some downside, then a break of this upside line taken from the low the 2nd of December of 2021 would be needed. Ethereum, jumping into Ethereum very quickly. Yeah, beautiful reversal. Okay, so we dropped, well, actually I'll have to pick it up from here where I left it, and as you can see, we dropped below that 2,718 territory, and my next target was this 2,478, which we managed to reach perfectly, and yeah, we even managed to overcome it. Then we targeted the lowest point of February, which we managed to reach. However, we didn't really reach the lowest point of January, and yep, we can see that we're now reversing to the upside. However, if you're looking for some higher levels on this one, or at least some upside, well, I would actually wait for a push back above this 2,478 level. Then yes, if we climb above this, then yeah, I'll aim for this downside line taken from the high of the 3rd of April. Now I get it, it's a bit of a tentative line, but nevertheless, for now we'll keep an eye on it to see if it's going to play out or not, because actually it might also come in line with this 21-day EMA later on, so a lot of things could play out here, but let's keep it short and simple for now. For me right now, like I said, I'm keeping an eye on this hurdle in this area near the 2,478 zone. If it provides a hold up, another decline could be possible. If we break and stay above it, then maybe we could consider a bit of a move to the upside here. Usd Jpy, so this was quite interesting, and well, a while ago, I haven't picked up on this one for a while, as you can see by the lines here. So one thing I can remove here is, for example, this one and this one. I can, oh, not the line, not the level, but this line I can remove here, and I can put it around here. So a few levels have to be adjusted, of course. So yep, one thing that I'm going to be keeping an eye on here is, of course, this area, this 90.45 zone, which could provide for now continue to provide a hold up. We could be forming this descending triangle pattern, which according to all the TA rules tends to break to the downside, of course, but eventually, if, let's say, if it drops again below this 90.45 level, then that's where, yep, it could become a little bit more interesting for a few more sellers, and we could go for the 88.49 level, somewhere around here, maybe even this low, the low of the 21st of March, near the 87.84, but either way, we will be aiming for this upside line taken from the low of the 28th of January of this year. USD Jpy. Now this one's a different one. Yesterday I talked about this and I said that if we push through this 131.25 level and stay above it, then, well, this is where we could get a little bit more excited with the upside. At the moment, I am going to take a cautiously bullish approach, because let's not forget that we're still trading above this upside line taken from the low the 7th of March. And yeah, if we drop, let's say, below this upside line, and even actually if we drop below the current lowest point of today, near the 129.80, if we drop below that, then that's where maybe more sellers could join in, and this is where the whole excitement could start, because as you can see, we have been kind of, grinding higher for quite a while now, and I would say maybe we can even draw Fibonacci here. So in other words, this probably somewhere from around here. So this Fibonacci, I mean, this is again roughly, because again we could draw it from here, we can draw it from there. Probably the reason why I'm drawing it from here is just because I'm liking the fact that the 23.6 is near this key support zone, so near this 127 level. Again, maybe being a little bit on the bias side here, but let's see if this is going to work out or not. I'm going to keep this for now on the chart, but for this idea to work out, of course, a break of this upside line would be needed. But if that's not going to happen, then this could still continue grinding higher. So I think that the sellers should not get their hopes up yet, because until we see that clear break. US dollar against the Chinese yuan, guys. So this one's quite interesting. So I think the Fibonacci here has to be redrawn as well, probably to grab this from the full reversal. Yeah, you can see here we're now drifting back to the downside a little bit. We've managed to reach some of the targets that I talked about previously. For example, this highest point of November of 2020 near the 6.77 level. If you remember previously, I talked about that level, and yep, we managed to clearly kind of test that area. Yeah, we did overshoot it by a little bit, but not significantly. So anyway, it just provided a good hold up. We're now drifting back down, so I'm keeping an eye on this 23.6% retracement on the Fibonacci near the 6.66 level. I want to see if this is going to get reached. Personally, first I'm going to be aiming for this little area. Around the 6.70 zone, and roughly around here, guys. And then yeah, like I said, if this gets cleared, then slowly I will continue targeting that 23.6% retracement, and then so on and so on. If of course we pop above the 6.77 territory, now that's a different story. We could continue rallying, and well, the next target here could be somewhere. Let me just probably put this on the chart. Could be somewhere around here, near the 6.84 level, or even near this 6.86 territory, approximately around there. GBP Aussie, very quickly on that one. So this one's a little bit of a mess, so let me remove all the drawings. So I looked at this one previously, and now we're seeing beautiful rejection near this area, as you can see here, near this 1.7175 level. We saw this rejection, and last week massive reversal to the upside. Look at this. I mean, this is just insane of a move. And what I'm keeping an eye on right now is, of course, this whole area right here in between these two levels, the 1.7857 and the 1.7887. Today we had a hold up near this 1.7857, we're reversing back to the downside right now. Again, you probably are following my logic now that if you're looking for some upside, wait for a clear break through this territory right here, and then yeah, we could go for some higher levels. At the moment, for the downside, I'm not really comfortable here with anything unless it starts, first of all, dropping back below the 21-day EMA, but let's not exclude the opportunity for this one to kind of start oscillating. And maybe a drop below this 1.7461 level. A drop below this might open the door again to the downside. So yeah, like I said, all this here is just, it could continue oscillating. So if you do like trading ranges, maybe this could, play out for you somehow. But again, have your stop loss in place, because this could go either way at the moment. EURUSD. So I'll pick up on this one again. As you remember, I mean, I have been talking about this pair for quite a while, but yeah, so far so good. So after we managed to climb back above this 1.6357 territory, I said that my next target is the 200-day EMA and this 1.6530 zone, which we managed to clearly reach. And yesterday, when we were still trading around here, I said that if we pop above this barrier and stay above this, then yeah, I'll go for some higher levels, where my next target will be, well, roughly around this 1.68 territory. Well, we managed to reach that, so perfect move, I would say. And now we're seeing a bit of a retracement. Well, again, if you manage to capture this, guys, then wonderful. Now I would say if we pop above this 1.68 zone, then yeah, I will go for some higher levels. At the moment, I might consider maybe a bit of a retracement here, back to the this area 1.6530 maybe. However, let me just look at it from the shorter term perspective. So let's say if we draw Fibonacci right now here, well, we actually can see that we are moving towards that 23.6, and we're very close to it. So this 50% is actually bang on the 200-day EMA. Now this is where it's going to be could be quite interesting to see if we can actually retrace the 50% here. and test this 200-day EMA. Either way, I will say this way: as long as we stay above this, all of the EMAs here on our daily chart, I will continue aiming higher overall. We could, even drop below this 200-day EMA, and there still could be a bit of hope for the bulls to step in near this upside line. So, however, if it, let's say, very quickly starts dropping back below this area, below this 200-day EMA, to be honest, that could make me worry a little bit, because it's kind of declining very rapidly. If it's going to happen over some, a few days, maybe a week, then it's kind of okay-ish. But if it, let's say, suddenly, let's say right now, start dropping back down, maybe this is, not as strong as it looks. And finally, EURUSD. So again, a beautiful false breakout, beautiful hold up near this 1.0495 level. Boom, there we go. We're climbing higher. However, I would say the bulls should not probably get their hopes up yet, because basically the formation. The formation that we're seeing here right now, something reminds me of, let me just bear with me one moment. So yeah, I think it's yes, like called the so-called the bullish 3 pattern here. So we are having, or even it could be seen as a flag of some sort. We have our pulse or bearish flag. So we have our little correction here to the upside, and let's see if we're not going to end up kind of dropping to the downside here through this upside line. So again, that's why I'm going to be very careful, and as I said before, my upside scenario is from around here, somewhere near this 1.0636 level. For the downside, I would prefer to see a drop below this 1.0495 level right here, just to be a little bit more on the safe side. However, again, as I said, something like this, I think that this is, just bear with me one moment. Yeah, let's see, like I said, let's see if this is gonna end up being somewhat of a, as I said, sorry, that's the falling 3 method. There we go. It's very close to the bearish 3 line strike the pattern, but basically the falling 3 method is where, for example, we have our initial candle to the downside, strong candle to the downside, then we have a bit of a correction of 3 candles to the upside, and then the fourth one kind of is the strong one to the downside. So again, don't take my word for it yet. Let's see if that's going to happen or not. But for now, I mean, I would probably play it safer and wait for a drop below the 1.0495 level, and then kind of go for some lower levels. Okay guys, so I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. I hope you enjoyed it. Thank you very much for your views, your likes, your comments, guys. I really appreciate that. So thank you for all. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe and have your stop losses in place. Thank you very much, and bye-bye.